Chapter 6, that's home insurance, homeowner insurance.
Yeah. So anybody had a chance to look at it? And like I say, we don't always have to just take what the books say. You can always come with your ideas, what you know about home insurance, how it works. Because I know we all have coverage. A lot of us have coverage on our homes, be it contents, be it coverage on the actual house. Um, so I know we have fire. We have most persons who have mortgage loans at the bank have to have comprehensive insurance where we have to take out for disaster and not just to say fire and theft. It has to be fully covered. And like I said before, if your house is your mortgage is with the bank, you have the mortgage is the mortgager. They are actually, you have to name them. It has to be assigned to them, so they are lost paid. So if something happened to the house, if a hurricane happened, if the house burned down, it's like um they will, the bank get paid first, and whatever is left, then we would get it. Whoever, you would get the balance after the bank is paid off. Yeah. And that's why it's imperative that we have adequate house insurance. So a lot of times people would insure a house to say, okay, my house is insured for 400,000. But when the appraisal, if you should have an appraisal done. When the appraiser does an appraisal on your house, they come up and say should be the house is valued 700,000. So right there, you're underinsured. And a lot of people lost when it came to Dorian because a lot of people's house were underinsured. So the insurance company used that as a leverage to say, but we can't pay because you were underinsured. Yeah. Anything else somebody want to add to homeowners insurance? Who read? Miss Knowles? Miss Nan? Anybody had an opportunity to read?
I read it. Basically, what I gathered from it, what stood out to me was that I think they have four homeowners insurance.
Mm-hmm.
And one of them was the rental owner. That's number four. The fourth one was for renters.
Mm-hmm.
And basically, everything you mentioned was what stuck to me after reading chapter 5.
Okay. I'm trying. How Miguel have this set up? I can't even see who all. It's just two persons on. You and Miss Angelique. Okay. Miss Cartwright, you're there.
Yes, I'm here.
Miss Colette Knowles, are you here
Yes,
too?
ma'am, I'm here.
So why y'all ain't showing up? So I can't even see.
What you mean I ain't showing up?
It
Oh,
ain't showing. How Miguel do it? Because this one, I like, he just have the Biff's class 5. So I'm not able to see. Now that you talk, I'm able to see that you're there. Miss Burrows. I know she was in there. So Miss Knowles could give us a good insight. She used to do insurance, so she know Miss Paulette. She know a lot. Give us some insight about house insurance. Did you deal with that?
no, not like, well, and the department that I'm working in now, I'm dealing with it somewhat. For
Uh-huh.
instance, like you said, the insurance is assigned to the bank. Um, the house insurance is assigned, no, sorry. Your house has to be insured, not necessarily assigned to the bank, but it has to be insured. Because it is a bank's asset, we do the tracking. So I do the tracking of all mortgage insurance on homes. I have to make sure that it's paid so that if there's a hurricane that happens, or any perils, house fire, whatever, we get our monies. Oh yeah, there's no. It is assigned to Commonwealth Bank.
It has to be.
Yes, it is assigned to Commonwealth Bank. So once, and they have to meet the deductible in order to get the funds to repair, replace, or whatever.
Yeah.
I know we had, when it was, what was the last bad hurricane we had?
Dorian.
Royal Star Assurance, my friend who was an adjuster for Royal Star Assurance, he was on the ground in Grand Bahama. They wrote off boats. Some of the houses were just foundations. And for instance, like this lady's house was insured for $300,000. She got, I think he said she got like 200 and some thousand. She didn't get the full amount.
Why?
Because of the location of where her house is. That's what it was. At one point in time, and she was close to the shore. So it depends on where your home is located, and you pay a higher premium, but she didn't pay. She just was paying the regular premium. So they took more than the 20% that they were supposed to.
Well, but with the bank, like you say, you that's part of your portfolio in the bank. But in the bank, when a house is built, when a house is insured, wouldn't the insurance company, the bank, see that, okay, this house is located here, and the bank don't ensure that adequate coverage, the bank won't know that different coverage for different locations? Hey, Miss Knowles. Hello.
Yes, ma'am, we're here.
No, I was trying to speak. I didn't hear Miss Knowles. She was. Hello. I'm not hearing Miss Knowles. But like I say, with house insurance, and like we know, a lot of persons with Hurricane Dorian, you go into Abaco, you know, a lot of persons, they, like Miss Knowles said, foundation, and a lot of persons were on the beach. And we know that in the mud, a lot of persons, you know, they didn't have no insurance, so, and everything was flattened. And in Marsh Harbor, it was the same thing, even though they were concrete buildings. And when I saw Marsh Harbor, I was like, no, this cannot be Marsh Harbor. The place that I knew that I used to go and visit, like for work, I was like, whoa. So you're saying to me, Miss Knowles, if those persons' house was near the shore, the deductible was more, so they paid persons less because their house was closer to the beach or something? That's kind of, I would like to think that they go out and, I guess they don't do no inspection, but usually a lot of times the bank would, the insurance company would ask you for an appraisal, especially if you taking out a new insurance. You have to show them an appraisal. You can't just show one value to say this is what the house is valued, because like I said, at the end of the day, if you just give the insurance company any figure to say this is what the house value, and then at the end of the day, when a disaster happens, you will never get the full value of what the house was insured, should have been insured for. You'd never get it. Anybody else have anything to add to it regarding house insurance, especially our experience here in the Bahamas? Miss Nan?
I have nothing really to add to it. I know with homeowners insurance, you can expand it a bit in terms of being able to cover, what is the word I'm looking for? Like your appliances and
Contents, your
yeah, your
contents.
contents. Right.
Mhm.
I know it'll be additional charges for that, but you can also cover your content up to a certain amount. I feel as though
Mhm.
that'll be beneficial because sometimes even with BPL, the power sometimes this damage certain things. And I
Yeah,
recently
agree.
found out that you can actually claim for your content when stuff
Oh,
like
I
that
never knew
happen.
that. I never knew that.
Yeah.
Gee. I had a whole fridge gone. I never knew that.
Of
My
course,
fridge was
there's a
6 months old.
deductible,
Gee. I
but
never knew
yeah,
that.
yeah.
I never knew that. And like a lot of people insure their jewelries and all the rest. So if there is a fire, they all of that is insured. They have their jewelry insured, so if they lost those.
You also have renters insurance, you know that, right?
Right, right. Yeah, because like say you renting, anything could happen. And like I say, it's so dangerous. Like when you're renting apartments or renting an addition to your home or just an efficiency, because like a lot of times people are not so careful. So if you renting, you have to make sure you totally adequately covered, because I learned of somebody who had a fire, and how it happened was so weird, because apparently and they did just finish paying off for the house, so they didn't even have no homeowners insurance. Because a lot of people, once they finish paying the bank, they don't even be interested in taking out insurance. They add on an addition, and they do not take out housing homeowners insurance, because they say, I don't have to pay the bank no more, so I'm paying this insurance. Even if you just take out fire, even if you don't take out disaster, because when you go to the insurance company to take out a house insurance, when you owe the bank, you have to take out that big insurance. Like you got to pay that big. If you insuring for one good 600,000, you got to pay that big 6 grand or 7, 8 grand to the insurance company, because the bank say, oh, you have to insure it for disaster. So you have to insure for hurricane, even though you may never get affected, but you having to pay that money every year, because you still have a loan with the bank. But when you don't have a loan with the bank anymore, a lot of people, what they do, they just say, okay, I don't have a loan anymore, so I'm not taking out a no insurance. But I would say to anybody, even though you may not have a loan anymore, and you may not want to take out the disaster insurance, where just take out the fire, make sure I have fire, because that happens. Things could happen, anything could happen. Like we say, renting, and like I said, with this situation, apparently their daughter was on the laptop. She left it on the bed, and she went, I guess the laptop run hot, something. Next thing they know, the house was on fire, and they lost everything. They lost everything. And the house wasn't insured, and they add on a big addition to it, but didn't even insure it, because they finished paying the bank, so they didn't even insure the house. They
Also,
didn't insure
we
it.
have a coverage for construction as well. Like when
Right.
you constructing your
Yeah.
home, and let's just say the
Thief. The
supplies are
thief.
stolen, right?
The thief. The
Right.
thief come. They have to take
Right.
out contractors all risk. Contractors
I-
all risk.
Yeah.
They take
yeah.
that out for 6 months.
Yeah.
And because the thief is come, because the thief looking at you. Okay, yeah, they putting in them windows. They putting in the windows, and they putting in them doors. Hey, even the workers on the job, they the ones who come back and say, yeah, they putting them in. Let me go. Because I had that situation where somebody they came and took all the windows and the doors. I reached to the house. I was like, something looks strange here. And when I look, all the doors and the windows was gone. I said, what the dickens is this? And at that time, we must have had in 20 windows, and the doors and everything was gone. I was like, and then the insurance company didn't want hardly give you anything. Like I say, it's just always so sad. You pay the money and you expect to get what you pay for. And but the insurance company always come with these adjusters and this and the next. And that happens. Even like I say, when somebody knocked my wall down, the insurance company just gave me so much hassle, and with his insurance company, because he didn't have this kind of coverage, but that don't have nothing to do with me. Then he need to pay out of pocket. Yeah, but insurance is, it's really kind of good, and then it's kind of you paying for it, but you still don't always get the full benefit from it. You know. Yeah, but it's good. You have to take out contractors always, and it's usually a 6 months process, because a lot of times, and then when the 6 months is over, then the person got to go renew it again. But contractors always, because we have some people who say, okay, I can finish the house in 6 months or 3 months, and take a year and a half before the house is finished. So you have to have contractors always when you're billing. That's the first thing the bank is asking for too. The contractor have to take out that contractor's always. So if you don't have the money to pay for it, then it's gonna come out your proceeds that you would be giving him, and at the end of the day, you'll just get it back. Yeah, but you have to take out contractors always. And as you would see on page, well, in my book it says page 153, page 77. It talks about the different, the 10 most cast, those terrible hurricanes that happen in the U.S. They talk about them all. They talk about the damage that it created in the U.S., mostly in the U.S. Hello, I hear feedback.
That was
Feedback.
Andrew. Who was in what the place name is? New Orleans. No, that was Katrina. I don't see Katrina here.
Katrina. I mean, New Orleans, they really had it. I mean, it's just been so much bad hurricanes recently. I just pray every year. Once you see the year start, everybody start praying, Lord, don't let us have no hurricane, because it's from June to November, So it's just praying that we don't have none of these catastrophic hurricanes. Yeah. And then we have the homeowners program development, which is like we talk about the comprehensive protection to owners occupied 1 to 4 family resident is found in homeowners program, an outgrowth of several attempts by insurance industry to develop policies to provide more balanced and adequate program of insurance for average homeowners coverage. And like I say, you'd see homeowners policy when it was developed. It was developed in 1958 by a multi-plural insurance conference. Major revisions had resulted in today's homeowners policy. It's written in easy to understand English, is multiple lines, requires minimum amount of coverage to be purchased, costs less. Every year insurance is going up. Every year. I don't know what insurance is going to be this year, because of Dorian, insurance has just gone up. Well, we should see some slight decrease, because we only paying 10% now when it comes to VAT, right? So we ain't got to pay 12 no more. So 10% on VAT, we have to pay for VAT. So, but like I say, in our country today, talking about actually in the Bahamas, a lot of persons don't, like, say for instance, I add an addition to my house. I don't tell the bank, the bank don't know I have this addition added to my house, because I did it out my pocket, even though I have this mortgage at the bank. I add this piece onto my house, but the bank doesn't know. So before I increase my coverage, I still don't increase my coverage. And so as far as the bank concerned, my house is the same 3-bedroom, 2-bathroom that they gave me the mortgage for. But something happened. Then I'm going to the insurance company and I'm saying, I have a 5-bedroom, but no, that's not what you were insured for. You only had a 3-bedroom. And I put on an addition, but did you come back to the insurance company? Did you get an appraisal done to say, okay, I did an addition, so I need to increase my coverage? People don't do that. Do you, any of you who have homes, do you, if you put an addition, have you had an opportunity where you had to put an addition and you increase your insurance?
I did, but that's because the bank made me.
Pardon me?
I said I did, but that's because the bank made me. I didn't do it out of pocket. I went back to the bank for an addition, and they made me increase my insurance.
Oh yeah, you have to, because you going back for some more money for addition. So that's a part of that's the part of the asset. So
Yeah.
you got to, you have to increase, because anything happen, they have to get fully paid. Because you know what it is when you get a mortgage from the bank. You something happened, house burn down, catastrophic, something happened, a Dorian, Andrew, a Katrina happened. What happens then? You underinsured, so what's gonna happen? You can still have that little mortgage, and then you're looking at the bank and say, well, hey, I need to live. How you expect me to pay you all, and the house gone, and I need to do this and I need to do that. So the bank, what happens then if you don't choose not to pay the difference that the insurance company didn't cover? Then you have a non-performing loan there. Then you have a charge off, or inactive or active charge off, where the bank have to put that there, because what you say I'm paying, because the insurance company pay you all, I get nothing from the deal. So you choose not to pay, and a lot of people do that. A lot of people do that, and so that's why today you have a lot of persons, when they lose the house and the bank sell the house to someone else, sometimes the bank make them sign stuff to say, okay, if the or say they get delinquent and the bank sell the house, and so the bank would have them sign some letter to say, okay, if what we sell the house for isn't sufficient, will you all allow us to just write it off? No, the bank says to you totally that you have to pay them. And so that's why they make you sign something to say you have to pay if you don't have, or if you, when they sell the house, the loan isn't fully paid off. You have to pay. You have to sign that document to say you have to pay the bank back whatever the balance, be it 30,000. You got to find the money, because they was able to sell, but that's all they was able to get from it. And that's why I say today, in our today's market, especially after COVID, I mean, I've heard so much stories of people losing their homes. And so when, Ms. Knowles, so when an account becomes delinquent and it goes into non-performing, the customer no longer able to pay for the house insurance, the bank pays for it, right?
Yes, ma'am. We keep it insured until we sell it.
And when you sell the house, is that insurance add whatever years the customer didn't pay, is that added on to the selling price?
Yes, ma'am, inclusive of the, once we go to sell a property, we have to have it appraised. So we can have a true market value of it for the sale at that period of time. And we use that market value that's given to us by the appraiser. And once that is done, the person is made aware. There are some people that just walk away, and if the bank still have them on the books, they don't care.
Yeah,
I've seen that
then it
happen.
goes into charge, or active or inactive charge off. So
Yes,
yeah,
ma'am. But once
people
they
don't
sell
really.
the house, if the bank try and just, most banks will tell you we're not in the real estate business. So we are just trying to recoup our money.
What
If we get
y'all owe
more,
us.
we will give you the difference, but we're not in the real estate company.
And if we get less, we coming to you for the difference.
Yes, ma'am.
Yeah, but like I say, so no, but I was asking whether they have all that insurance, them years, the customer ain't pay, so all that's added onto that balance, to that loan balance. They ain't pay them house insurance, and the bank got to pay it.
Yeah, but when they go into the delinquency after a while, they cease to insure the property, you know, it's in dormancy, there's no income, they charge that off. Now, as a
So,
house
okay,
deteriorates,
so
yeah,
so if they have a house to sell, if they have a house to sell, we on page 79. Well, we just really talking, Chanel. We just really talking, Boris. We just talking. We just coming without, you know, just talking about it. But if they, so if what happens if the house burned down? Hey, knows what happens if the house burned down if they cease to insure it?
the bank is at a major loss then.
But I thought they would keep it insured no matter what.
Sometimes it depends on the value of it, but if you drive around and you see some of these homes, they have them insured. If they are sellable, yeah.
But if they're not?
If they're not, and they're just looking for the funds to satisfy as much of the loan as possible, that's what they do. I was just doing an exercise last week after reading this. I reached out to, I was Scotia? No, it wasn't Scotia. First, Fidelity about a property. There was a house on it, but the problem with it is I've watched this house on this one I'm thinking for almost 5 years. It is so deteriorated. I asked them if it's insured or what. They say no, it's as is now. Once it gets to a certain level of unoccupied, they are only mostly trying to recover something, and usually they're not getting all. This is from one of the guys who works at Fidelity. A friend of mine who I was talking to. We had some that's been on our property for years. That's still there.
And not sold?
And not sold. And then again, I don't know if you guys would have heard the other day, ask me, where there was properties being sold, but in essence, it's the title wasn't clear, and a lot of them are mortgaged. And
so when you say they're being sold, but the title wasn't clear, so somebody else has legal rights to the property?
Correct. So if you notice some of the bank listings, they would have had like 50 homes on it. And then all of a sudden, when you call, it's not available because they have to go back to court to clear the titles in order to sell the property. That means that the title wasn't clear in the beginning anyway. A lot of banks are now doing that.
But see, and that's what happens. That's what happens when it comes to when a customer get a mortgage. When a customer get a mortgage, the banks and the lawyers don't do their full due diligence because, like I say, you'd have situations where a person's built on somebody else's property.
Correct. I don't know if you remember the one on the Charles Abuse on this highway.
Yeah, with the church.
That's an example.
Yeah, it is. Yeah. But like I say, I didn't know they stop insured because I have a house next to me, Royal Bank. They came, they backed it up from the inside because the guy his wife owned the house. I don't know if his name was on it also because she had the house before him. But they came, they backed up, and then the whole bottom line about it is, I look over there every time I clean the yard, the bushes just keep growing through the fence on my side. And I'm like, I thought the bank is supposed to keep these places. You're not supposed to make sure they weed and clean every.
Yes, ma'am. Yes, ma'am.
You always do that?
You're supposed to do that.
Well, this one here, every time I need to go call Royal Bank and say, you all need to come because I am so tired of. Don't worry, I can spray weed killer on the bush, and they can't plant nothing in the yard because I am tired. Then I have another one next to me where I've been cleaning the property down for years. I say I needed to be, I should have been smarter because there's a guy, the defense force officer, he was cleaning this property down for 20 years. He planted fruits, he planted everything on that property. And at the end of the day, the court give him the property.
Yeah, that's called vacant possession. I was about to tell you that's a law that if you can prove that you were maintaining and the people around has to confirm that you were doing that, and if the day you plant something on that and you cultivate it, it's after 10 years, you know, he didn't have to wait for 20. After 10 years, consistently.
Well, child, I've been doing that for more. I've been doing that for more than that. I should have planted something on that.
After 12
right
years.
next.
After 12
Is
years.
that 12 years? Okay, I know it, but it wasn't no 20 years. But
Yeah,
because I've been doing.
Cuban Ingram changed it to 12 years. It used to be 25.
Oh, oh wow. So
Well,
what you do is tomorrow
I can start doing
tomorrow,
that.
you go to the plant place and you buy one nice little flower and create a bed and put it there. You've been doing it long enough. That's your property.
Yeah, I can start doing that because I'm like you know how much money I pay to get that property clean, and because it's right next to me. So you know, people is hiding the bush and stuff like that. So I'm like, I have to be paying to get that clean. No, it is scary, but these people, they dangerous.
Yes, ma'am.
Dangerous. No, child, it's scary. Y'all didn't see that thing with that guy who, when he reached home at Fox Hill, how the fellas them meet him, and he coming out, the fellas them get him, and he pleading for his life. Oh no, pleading for his life, and then he telling his wife.
And then he finally said, "Andrea, open the door."
Yeah,
I thought that was you.
Not me, child. No. If that was me, I better come out shooting. The what? No way. If that was me, I probably would come out shooting. No way. So it's scary, and people will hide in bushes. So it's really, really scary. So I now I try to get the guy to come in and clean it down, and then it grow right back up. And so I need, the next time I clean it down, I just need to go plant plenty things over there, and hopefully they'll see me planting them too, and come and do something with what they, when they see me planting and putting all kind of trees over there, they'll come and do something with it. Yeah. Because I've been paying to get it done for the past couple of years. Okay, so now it talks about minimum coverage. But like we say before, we should always try to make sure we have adequate coverage, because we can have minimum coverage, but if we don't have it insured for the amount that the appraisal is saying, we still lose. So it's always best to have the coverage that the appraiser look at and say, okay, this, all the properties around you, the houses around you, and most of them is this value and this is your value. So when you go to the insurance company, and insurance company should make it imperative that you do bring that appraisal there, so you able to get it done, you know, get the right coverage. Because I know when I go on insurance, that's the first thing the insurance company asks me for is the appraisal. And then after you go year after year, they ask if you did any upgrade, any addition and stuff like that. So then if you did, then they say, well, you need to bring another appraisal in, and then they'll go from there to give you a value of what you could insure it for, you know. But a lot of people, like I say, we like to take the smart way out. And so what we do, we say, oh, I ain't paying all of that. And then the same year we decided that we ain't going to go pay that. The same year when hurricane or something come and wipe us right out. Yeah.
Well, I think back in the day, they probably give you mortgages where insurance wasn't mandatory.
Yeah,
in certain areas, and I guess a certain amount of value for the home. But now, I think every mortgage, other than a little clapboard house or a little wooden house, you would be required, and to my knowledge, that is in your payment. They put that in escrow, and the bank pays
right now, like you say now, but before didn't matter. They didn't matter. But now, I don't know, do they now also start to include real property tax?
No, you have to pay on real property tax. Now, on the initial sale, that real property tax would have to be cleared by the seller.
Right.
But after that, if you choose to let your real property tax add up years and years, when it's time to sell, you would definitely have an issue. So if you're thinking you're selling your home for 200,000, person get approved for 200,000, and then legal work kick in and the sale at the end, and you find out from inland revenue that you owe 20,000, you
Yep.
walking home with 180. So
Yep.
those things, that's definitely gonna be taken out before that or the conveyance that could be
Yeah.
conveyed into the next person's name.
Yep,
Yeah. Yeah. I know.
I know someone going through that right now. They owe 40,000
Real property tax.
real property tax, but they were giving a discount to senior citizens, so hopefully they will get that.
Oh, okay. Well, like I say, and that's why I never understand. It's like we pay so much money in insurance, real property tax, and we still, our debt is still so high. You know, the government gets so much because, like in my class last night, we were talking about going to the food store and how you going home with two items because everything is just so expensive. And I don't know how you all feel about the new implementation of the 10% compared to the 12 and the 10 and the VAT charge on the bread basket items. How do you all feel about that?
That was silly because that means at least the people who could have feed themselves with a bread basket can't feed themselves at all. You have some persons who making $250. They got kids, they have rent. By the time they pay your high utility, your high lights, and your rent, they ain't leaving nothing.
Yeah.
Crime is going to start going on a rise because people now trying to feed their families. I mean, it's not an excuse, but it's a fact.
Yeah. Y'all heard the thing husband died,
Oh,
Loretta Butler Turner.
oh wow.
Yeah, so he just had a surgery for prostate cancer.
Really?
And then he had a blood clot, and
Oh
then he had a
wow.
massive heart attack. Mm,
Sorry to hear that.
yeah,
Wow.
yeah, 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 yeah. hmm Yeah, but I don't know. Like I say, when you go to the food stores, just and like when it starts, when prices go up, women need that money. Them fellas going to come go up here. If y'all who like go to them drive through to the Wendy's and Kentucky and Checkers and all of them, y'all better be careful. It's look like the fellas is be laying way by the drive-throughs. One fella beat one woman right up, but she beat him up too, but he still get away with a bike. So try to be careful when I choose to always come out the car and just go inside. hmm Yeah,
So,
I
Miss
choose
Smith,
to.
we want to know what our midterm on. You ain't say nothing.
I finished marking your midterm.
Okay. You know our
Like
nerve
I
on
and I can tell my class
so
last night, if the midterm, I know, and if the midterm grade isn't what I expect it to be, then y'all gonna have exam on the whole class from chapter 1 to chapter 12. If the midterm good, then I don't need to give you an exam on.
so that would be everyone or
Yes, ma'am.
ooh,
So the midterm exam is good. You will only have your final exam will only be from chapter 6 to chapter, I think, 12 or
Miss
10.
Smith, if we have a final exam that as long as that midterm, but listen,
What happened?
ooh, listen, I tell him I said this ain't finished yet.
When I was taking that, I was dying.
Yeah,
Why you
man.
was tired?
That was long and tricky.
That was long and then
Why
questions. Jesus.
y'all always come but tricky? What tricky but it?
Yeah, that
Mm.
was
I,
cute.
I, I really, yeah,
No,
thank you.
it just No, it just tells me if you read. That's what.
No, like because number 17 was numbered, and then number 18 was a number that had gone on to
Yeah,
like the
But I thought
numbering was
Miguel tell
off.
me he fixed that.
that wasn't fixed.
It wasn't
Child, when
fixed.
you look at mine, you will laugh.
I got
No,
confused with what I was answering.
fix it on my own. Because I brought it to
Yes,
his attention.
Miguel told me he fixed it.
He
No,
fixed
it
it on
wasn't
my
fixed on
own. I
mine.
don't know if he
Right.
fixed it.
He said he fixed it on when you did it. So then he
Yeah.
should have sent the same one out.
And then we had, it was 60 ABCD thingum, and we only had 53 questions.
Yeah,
That's fine. But like I said, I give y'all more questions. And like I said, once y'all read and y'all answer them questions and look at them review questions, y'all should be fine. Because you may have had 1 or 2 or 3 questions that maybe y'all never saw before. But once y'all
yes.
look at the review questions, y'all should be fine. So if y'all ain't do well on the midterm, y'all can see the whole book for finals.
Oh, Jesus.
I come in and sit at your house, and you can take the test with me.
I don't never come to no exam.
I come into your house. You ain't gotta come.
So you all are me doing insurance now. So what happens when we get to like the handout that I give you, and then we get to talking about risk, total risk, and risk have like the type of risk. Then we talk about the regulatory body, like the central banking regulations and stuff like that. That is totally different. And then we have, then I put in national insurance. I put a lot of stuff in there that relates to national insurance. And then we talk about the US. What is going to happen when y'all have to do that? Because risk is totally different. And with the handout that I give you, would anybody pay attention to actually reading the handout, looking at it? What I gave you.
I was. I was laughing too.
Why you laughing?
I said, boy, she want me to know everything.
Huh? But see, a lot of people don't know this course. People is just look at it as risk. But this course is actually, if you look at the in the booklet, you'll see it's insurance, risk management, and insurance. When persons want to do actual totally risk, you have to do that risk manager course, which totally, oh my gracious. That's the cost. It costs almost 5,000 that you have to do, and it's a lot of work. It's plenty. And that they totally deal with risk, variations, deviations, talk about everything that relates to risk. I will touch on some of those stuff like the mean, the mode, and the medium, which all of y'all did in school before. And y'all may say, oh, I don't remember that. Right?
Yep. But then when you think, when you go back, oh yeah, and it's not bad.
Now you have me calculate how many years I done been out of school. I don't.
Miss Burrows,
I done been out of college 34 years, so I don't know about that.
Yeah.
So when you talk about you've been out of school, look at me. I've been out of school for how much years? I went back and I did my master's. Yeah, and I've been out of school for years.
You have refreshers every year.
Where I have that? I didn't teach for bits from 2020, because everything was on hold, and you know that they stop to study and work. You work at Fidelity and work there, and stress and work and study.
Yeah,
and
I don't think no one was interested in school at that time. I don't know.
Yeah. So, Okay, so now like I say, as long as there is, I don't think nobody's supposed to get a C in no class what I teach, because I think for me, I am a kind of person, I don't try to, I know you work, I know you have more than one class, and so that's why I try to give you all a review sheet. And I still good because we have some teachers who give you a review sheet and you have 300 questions. So I'm still good, so you get the review sheet, and I may not bring the questions as I give them to you, but it's there, the same question, so y'all should be fine. So why y'all think y'all didn't do well?
I scary when
Burrows?
taking tests, you know, I freeze up. I ain't gonna lie, I freeze up.
I don't think
It ain't that we didn't do well. It's
well.
just we just want to know. Yeah.
We
Y'all will know.
only, Miss Smith, we can do from 6. The next test is gonna be from 6 to 12. We all did well.
Yeah, I agree. But most of my class, that's what happens. I try not to go back and give you from the beginning. I say wherever we cut off at midterm, that's where we cut off when we begin. And that's where I give you the final exam on the other portion of the class. Yeah. I saw a class that this offered 10% is your class assignment, 10 or 5, and 90% is your exam. You can imagine that? 90% financial literacy or something. 90% is your exam. And 10% is your assignment. You can imagine having 90% is you have to make it in the exam, and 10% is just the assignment.
That's bad.
Yeah, that's rough. You know, that's really, really rough. Okay, now, so I'm on page 178, 156, low cost. Because the insured is buying a package of coverage, costs are lower. So they say, I don't know here. I've never seen that you buy contents insurance, the mortgage insurance. I don't remember it being lower because I purchased more insurance. Maybe in the US that happens, or maybe we don't pay attention to it. Because like I say, a lot of times when we take life insurance, we don't pay attention. When we take out homeowners insurance, car insurance, we don't pay attention to the fine print. So you never know the benefits that you could have with insurance if we don't pay attention by reading. Ms. Knowles, you've been in insurance. Is this a part of a package? Does the insurance company offer a package related to give you a lower cost? Because I take out contents, I take out fire, I take out the comprehensive insurance for the house.
No, ma'am.
No, they don't.
No, they don't.
You pay the same one for contents, you pay one for car, you pay one for house, and
yes, ma'am.
That's it.
Unless
No
you live in the
comes from there.
states where what the one name that always on the commercial? Damn, not over here.
Oh, okay. We don't do that
Not
here.
over here.
State farming.
No, that's the one with the woman.
No, yeah, I think so. State Farm.
Okay, only them. So if you want to get covered by them, tell them come over here.
Okay. Yeah, so they say in the US, I guess, once you covered under all of these different insurance, you get a lower cost, you have a lower package, you get a package.
You have a bundle.
Yeah. So everything is less. Instead of you having to purchase it separately, you get a bundle. Mm-hmm. Yeah.
No, over here they only go by the value of whatever your contents value is, then you get the insurance. So it doesn't matter if you have house, car, content,
They ain't giving
whatever.
no discount.
There's the value on each item is what you would get. Mm-hmm.
Okay. Okay, okay, now outline homeowners coverage. Table 6.2 summarize the coverage offered by most of the primary homeowners form. Designated, these are different type of insurance forms now that they have H2, H3, HO2, HO3, HO4, HO5, HO6, HO8. Now, these are the different insurance, and trust me, you see these, it breaks it down. It tells you what each coverage covers, and these are, you will see them on the exam. They're there. You will see them on the exam. So it says that a dwelling must be owner occupied to qualify for dwelling coverage in the program. So, like we said before, when you're building a house, you take out contractors all risks. So this is, say, if the thief come and thief some stuff, hey, you can get some money back. You ain't getting all what you pay for them materials. I can assure you, you won't get all. You will get a certain percentage of that money back. But any contractor building a house has to take out contractors all risks insurance, even if the owner has to pay for it and then it's deducted from the contractor's pay first stage payment. But contractors always, each contractor have to take out contractors all risk insurance.
No, they have to present that to the bank before construction.
Agreed, you know, but some people, because the contractor don't have the money, the customer can agree and say, okay, it can come out of my first stage, my pay. It could, you know, when he gets his first stage, it can be added back to my loan. It's certain banks will allow it to happen, yeah, and some won't, you know, because some contractors, majority of them ain't get no money because they build one house, then they go to the next house and they still ain't get no profit from it, yeah, because a lot of them sometimes don't even complete the house, so the person fire them, so they go to somebody else, and you know, it's like some of them never get a retention because the people will say, oh, we ain't pleased with the work, even if the man did a good job, you know. We just, a lot of times they say contractors are at fault. No, we have a lot of persons who are homeowners who take money from contractors by asking their friend to come and say, oh, the contractor didn't do a good job, and then at the end of the day, before they give that contractor his retention money, they keep the retention money to furnish out their house. A lot of people do that. Yeah.
Ooh, nasty.
A lot of people do that. They do that. I had a friend, I remember telling me, because my husband, my former husband, he used to build houses. He built houses. And so she told him, she said, oh, I don't feel like paying that contractor. But I don't think he do. I want that money for me. I need to do stuff. And so she asked him, he said, no, I won't do that, because then somebody could do the same thing to me. He said, no, I won't do that. But people do that. They do that because he had in situations where
Wow.
so many houses he built and didn't get retention, and it happened because he become too friendly with the person, and at the end of the day, when now it's time to pay out, now you see me getting all this money as retention, you don't want that, so now it's wrong day. That happened to him on many occasions. Yeah, and that's why anytime a person is doing anything, when you're building a house, whatever changes, that person, if they move a door, you draw up a paper and say you move that door, price change. But a lot of contractors they don't do that. They're not literate enough to say this. But a Moscow, when Moscow used to build those Cavaliers, they move something. I remember when I worked at one bank and they had to move one door. They tell us straight they're moving that door till they bring the contract, the show they're moving that door, and we have to pay for it. They're doing that like how the contractors who don't have the money, they just say, okay, word of mouth. No, you have to sign for that to be done. Yeah, so a lot of times contractors end up in that situation. Minimum dwelling coverage specified by the insurer must be purchased. And like we know, you have to purchase a certain amount of coverage. We talked about it. For if you add an addition, you should also make sure that addition is also covered. Like I said before, if you don't go into the bank, you know, a lot of people, they don't go to the bank. They owe the bank, they don't go to the bank, and sometimes they even mortgaging up to date, and they adding a piece onto the house. So if the bank take the house, the bank get more asset to sell, because guess what? The bank didn't even know that. So when an appraisal is done, what happens? The bank, the asset is higher. So like I say, with this, y'all just need to go over them and look at these HO2, HO3, HO4, HO5, HO6, HO8. They break it down more as we go on. We'll see. The terms, limits of named perils mean your fire, light, windstorm, hail, explosion, riot. Oh, I don't, do we have the Miss Knowles? Is that on our contracts and stuff over here with if we have a riot?
They have everything listed in the US, because remember now the companies here are covered by US companies, which y'all don't know.
Right. Yes, we know, because guess what? We think that when our house get burned down or some family member die, oh, so much people die and the insurance company can go broke. No, they have us insured somewhere else. So they're totally covered. They totally covered. So, and that's what we don't know. We think, oh, they have the, no, they do the same thing. That's what they always say. But the number places, when people think they winning, the number places buying numbers over there too, so they ain't winning. They ain't losing nothing. They winning, you know. And that's the same thing with insurance. Insurance have us covered too. So they have their own self covered. So you know, they cover. So you
Yeah,
have
J.S. Johnson's is like an they're like an underwriter for a bigger company elsewhere in the U.S.
right.
So that's why
Yeah.
we are tied to whenever something happens there, our insurance will go up.
Yeah, yeah. That's what I say, because that's what happens. Most insurance company, they have life insurance, they have us covered somewhere else. House insurance, car insurance covered somewhere else, you know. Opal Perils in the new name for, it's the new name for what used to be called all risk coverage. Coverage is for any direct loss to properties except for certain losses specifically excluded in a policy. And like we know, because like I say again, we don't read, there can be some exclusions. There can be like we have where we have deductible. A lot of people be like, what you talking about deductible? Why have to pay? Why does it have to come out? And that's why you see a lot of times when the hurricane come or they have flood damage or whatever, they make sure that that person, the adjuster, does that figure higher. So that covers their deductible. So they ain't losing nothing when the insurance company only won't give them this. They already have that all worked in there. And a lot of people do it. The adjusters do it for them. As I've heard that a lot of people get it done. So the adjusters will say, okay, now, you know, if you want this, we can do it that higher. And, you know, they just must gain them couple dollars to make sure it's done that way. Because the insurance company always win. They never lose. The insurance company win. That looks like that says the same thing. Outline of homeowners coverage. Like I said, it's talk about the H2,
They got a washer was all over the
H3.
floor.
Yeah. And so
Yeah.
commonly called, we like we say, we have the renters insurance too. And the renters like tenants, the H4 form is for the tenants insurance.
Antico?
Commonly called renters insurance. H08 form was developed because many people are moving back into old neighborhoods and renovating houses. So these different forms for different type of, I guess, like now they saying people moving back in old neighborhoods and renovating the houses. So when you're going to renovate a house in the US, it seems as if you have to have a different type of insurance because you renovated. So now it's a different insurance form you have to fill out because of the coverage you want because it's a renovated house. The market value of a home might be 100,000, but its replacement cost could be twice that. The standard homeowner policy would encourage the policyholder to insure at least 80% of the replacement value. And so, like they say, insurance, they encourage them to at least insure 80% of the replacement value. These prints, y'all print fine too?
Yes,
Y'all
ma'am.
print fine? I can't even see that. Okay, somebody need to read H3 coverage, which deals with dwelling, because my print is just so small. I have to tell Miguel them, but I can hardly see it. Nice wear glasses. So somebody could just read that H3 coverage, dwelling home. Miss Nan, Miss Burrows, Miss Knowles, anyone?
H3 coverage, a dwelling home. Coverage A is a dwelling on what the policy calls the residence premises. The one of the four family dwelling where you reside, other structures and groups. Oh, this sound like this sound like in the Grove or the
Oh, why
park.
you say it's all in the Grove? Because all the
Sorry.
people have those different houses in the yard.
The one to four family dwelling where residents, other structures and groups of that location or that part of any other building where you reside, and that is shown as the residence premises in the declaration. So I can make a crazy assumption in this saying that this is like the mud. You have one main house and then plenty of houses added on.
With the drop cord running through across.
So, yeah.
But now remember in Nassau, around we have where if you go on a Blue Hill Road, where is it, Ponciano, you will see just before you reach the light by Shell, you would see they keep the yard very good, but you'll see like 4 or 5 houses in that yard.
Mm-hmm.
Yeah,
so this is the type of coverage we're talking about.
Yeah, but you know those people they not them insured. Like y'all say, they clapboard. So you know most people don't.
You'll be surprised. You would be surprised.
I would hope so, because like I say, a lot of times you hear people say they don't have their house insured. They don't. And like I say, when I finish paying for my house, you know where in the world nobody, you know where I insured no house for no for disaster. If you insure the house for fire, you pay one probably the most I would have paid it's $1,500. When I have to insure it for disaster, it's almost $6,000. I'm like, what is this? I said, Miss, why the insurance so high? Because I'm like, fire. But because I still owe the bank, I have to pay that big money to insure the house, because I have to have the bank as loss pay. I Miss Knowles.
Includes structures attached to dwellings such as patio, roof, a carport, or an attached greenhouse. Dwelling coverage also involves materials and supplies located on or next to the residence premises for use in the construction, alteration, or repair of the dwelling or of other structures on the residence premises. So pretty much anything that's on that property is covered.
Yeah. Anything on that.
Wow.
That property, you have materials, you have a patio, you have anything there on that property. When you do a HO3 coverage, which is a coverage A dwelling, all of these things are covered under that insurance. Then you have I can see this one. Then you have a HO3 coverage, which is a coverage B, which is other structure. Other structures are defined as those separate from the dwelling by clear space or connected by only a fence or a utility line. A garage that is not attached to the dwelling is an example of such structure. So if you have a garage, you know, like how people who have those nice big homes and they have the little cottage in the back, they have the little pool house, and then they have the little garage over there. So those things are covered under HO3B coverage. Coverage B is designed for structures personal use. Other structures used by business purposes or held for rental are not protected. So they telling you if you have rental or other businesses, it's not protected under H3 coverage B. Then you have H3 coverage 3, which is coverage C, unscheduled personal properties. Covers personal properties owned or used by an insured while whether in the world subject to exclusion. Types of property protected include such items like jewelry, kitchen appliance, furniture, other clothes with I look at it and call it what? Contents insurance.
Content insurance.
Right. Beside the insured property, property of other while on the resident premises is protected if the insured requested, right? Because even if you insure a house and you do not take out contents insurance and the house burned down, you don't get paid for no contents and no contents. So when you take out house insurance and you want your contents insured, you have to actually take out contents insurance for them to be insured. And like for your jewelry, you have to insure those too, because people insure jewelry. Some people have so much jewelry that they have no other choice but to insure those jewelries. Okay, now I can't see H3 property excluded. So, Miss Burrows, can you see your writing fine, or you can read that for us, please? I can't even see that. The girl was doing what he called it down.
I can't move as fast as I used to.
Okay, that's fine. Someone else, Miss Nan. Oh
Okay.
yeah, I remember. Yeah.
Articles separately described and specially insured in this or any other insurance, such as expensive cameras, watch, or diamond ring. Animals, including birds and fish. Motorized land vehicles, except those not licensed for road use, that service and insured residents or assist with handicap. Sound equipment while in an automobile, aircraft and hovercraft and their parts, property of roomers, boarders, and other tenants, except those related to and insured. Property contained in an apartment regularly rented or held for rental. Property rented or held for rental to others away from the residence premises. Books of accounts, drawings, or other paper records or electronic data processing tapes, wires, records, desks, or other software media containing business data.
Okay, so we see all of this property excluded. All of these things here under this article, these are the things that is in this H03 property exclude. So if I come to you and I say, I give you a question and I said, these items are property H3, property exclude. You can't say I did a tricky question because you have it all there. And like I say, when I do the questions, I go through it and I try to change it around where it says is, I say not, and see if you will pick it up. And so that's when, like I say, if you do any external exam, like an exam I'm trying to take now, the CIA, if you do that, their whole exam is totally multiple choice, 125 questions, totally multiple choice. Nothing else but multiple choice. You can only be right. You have to read, you have to really study to be able to answer those multiple choice. And that's how come a lot of people, you'd say a lot of people don't, with the external exams, like I say, the CIA or the CPA, a lot of people have to reset it again because we have to actually really read, really understand, really be able to put different concept into the right perspective to be able to pass them exams. And so that's all I do is try to make y'all think and remember from y'all reading. So to pass, you always have to read. You can't just try answer them questions. You in answering the going over the review sheet, it helps you to actually have to read to be able to answer the question. Then we have H3 coverage D, an additional living expense. So it says that if your property get damaged and it's inhabitable and you can't live there, and say you was making money from this, the insured is allowed to maintain his or her normal standard of living. However, only the increased cost of living is covered. So you get coverage, living expense coverage too, which is HO3 coverage D, additional living expenses. Do you think we have that here? If your property burned down and you had a business there, like say you had a printing company and you had employees working there, so these are expenses. Do you think we have any insurance that would cover that, Miss Knowles, who's been in the insurance business?
I don't recall, but I know that a lady that lost everything from Abaco, that
Mhm.
wasn't covered.
It wasn't
No,
a
because
business.
when she came into the bank, she was telling
Mhm.
us, we asked, she said she had nothing to give to her staff. She had to go on her own personal thing to give them. I think it was 3 or 6 months
Salary.
salary, yeah.
Uh,
So
yeah.
I don't think they have upgraded yet.
But they need to, especially after Hurricane Dorian, man, they need to really revisit. And like you say, because it's the same, the insurance that we have here, it's the the daughter of those insurance company away. So how is it that they don't upgrade our insurance here so we get the same benefits that they get in? Because they getting the benefits, we're not.
So remember in anything, we kind of like only calculate our risk. The Bahamas insurance, because when I was speaking to Mr. Cargill, he said they just start looking worldwide because we are affected by what happened. I don't know if you guys remember the tornado and the ice and stuff what took place in Texas. I think it would have been last year, and the flooding. Then when the
Yeah.
hurricane hit New York,
Mhm.
that's when our insurance really went up, because that's an anomaly. And anytime there's an anomaly, that's when the insurance actually, the rates go up. So we feel it here on the back end. And in essence, we don't claim as much as they do. So we are actually carrying the bulk of insurance. It might seem small to us. It might, say, oh, it's only 25 or 6,000 or whatever, but we are actually carrying it because we don't claim as much as the Americans do.
Yeah.
And
And like
that's
you
who we
say,
are in bed with.
and like you say, because I mean, when I heard of the flood in New York and all those different, I was like, what? That don't usually happen. And then you look at, and like you say, we in bed with them. So, whenever, like they always say, when they catch the cold, we blow their nose. So that's how it is. Yeah, yeah. And now we have H03, D coverage, additional living expenses. Pay for losses of rental income. So you have to pay this coverage pay for your loss of rental income. This loss income would arise from a situation in which the insured rent a basement room to someone and the fire made it inhabitable. For many homeowners in South Florida, coverage D limits were exhausted after Hurricane Andrew. Little rental properties were available, and what could be found was expensive. Repair time was much longer than normal because the demand for repairs was much greater than the supply. So this kind of coverage, we have coverage for rental income. So if somebody catch a fire and the people can't live there no more, you also got to give me, I can take out this kind of coverage too and get paid. And so I don't have to worry. And they said that happened when it was Hurricane Andrew. Yeah. Then we have H3 additional coverage, debris removal. Having to remove you could take the coverage to remove debris, which includes limit of liability. However, when the limit has been exhausted, an additional 5% may be used to pay for the debris removal. Reasonable repairs made by the insured protect the property from further losses. Like I guess if we put a hurricane shutter, say, like yeah, hurricane shutters, loss after loss from the insured peril has occurred are covered by the policy. However, the provision does not increase the insured limit. Trees, stumps, and other plants, up to 5% of the coverage, a limit can be used to pay for loss to the trees. Oh, you got to pay for loss to the trees, the stumps, and the other plants, subject to a limit of 500 for any one item. So You see, if you get your tree get damaged or your plants, you getting paid for that. I don't think we do that over here either. HO3 additional coverage, fire department service charge in situations where the insured lives in a rural area and the city fire department makes a charge for responding to a call. The policy will pay up to $500 for such a charge. The charge must resolve from an insured peril and no deductible applies to the coverage. Do we have to, we don't pay for if a fire truck come to us, do we have to pay for that? For a fire? Anybody knows? Do we have to pay the fire engine? The fire department?
No, ma'am, I don't know.
No, they
don't
fall
think.
under the branch of the police department, the police.
Yeah, because they say yeah, fire department service charge. We don't have that here, but they have that service charge anyway. But you could do the insurance coverage. So if you had to call the fire people and they had to come, you could you get it, and they charge you get up to $500. Yeah, the policy will pay up to $500 or what the fire people charge. Remove property. If the property must be removed from the premises due to an insured peril, this removed property provision gives all risk insurance during removal of 30 days thereafter. And like I said, now it keeps going on to these different coverages that we can have. And like I say, I don't know. And like Ms. Noel say, probably because of what happened in New York, I guess the insurance company here will now take a better look and try to, I guess, replicate what type of insurance these persons have aboard. Because if we getting hit with the cost because of them claiming, then I think we should also have the advantages of being able to claim for the same type of damages. So I guess we just, and like I say, I don't know, but a lot of us don't read. So I've never read. I probably need to sit down and read my insurance and see if any of these things covered under that. That's what I need to probably do. Most of us need to do to see if they have any of these HO3 and additional coverage, which we can take out, which I don't think they do. Then we have additional coverage again, credit card, electronic funds, transfer card, forgery, and counterfeit monies. Although federal laws limit a person's liability to $50 per lost credit card, a stolen or a missing wallet full of cards can lead to a loss of several hundreds of dollars. However, if the unauthorized user is a member of the insured household, no coverage exists. Coverage exists for forged or alert or altered checks, fund transfer cards, and counterfeit money accepted in good faith. No deductible applies to any of these items. The insurer will pay defense costs to court suit brought against the insured under the credit card or forgery coverage. Anybody working credit cards? Miss Knowles, you work at Commonwealth Bank. Y'all have anything like this coverage in place?
Oh, I wouldn't know, but I know I right now fighting with Scotia because my card was compromised.
Uh-huh.
I'm ready to burn them now.
But I know with credit cards, when your card is compromised, I know if it's a debit card now, it's really rough. It takes a longer time, but a credit card, because like they say, Visa have everything insured. So if your card is compromised, Visa will totally pay you. And then they go out there hunting to try to figure out what happened. But I know with the debit card, because I had a situation with the debit card, and I sitting to the desk and all I hear is bing, bing, and somebody's using my card in Europe. And so it took me almost 6 months to get my money back because they had to investigate to make sure I wasn't the one doing the fraud. So, And it took me almost 6 months to get my money back. But I know they say when you have, and that's the reason why I took out I got a prepaid Visa, which is just like a debit card, but it's a prepaid Visa. So it's a credit prepaid Visa card. So if
Mhm.
I load my money on this, just the difference is I loading the money. So if I'm loading my money on there and I have to use the card, I use the card just like a debit card. So if somebody compromised if my card is compromised, the Visa
They
will
feel it's gonna get
automatically
hurt.
no, Visa will automatically pay me my money. They won't treat me like my debit card because it's a prepaid Visa. Even though
Well,
it's my
no,
money loaded there. Yeah.
no, Scotia don't do that. I let
They
them know
don't?
that my card was compromised, and that's like 4 weeks ago. And this is,
Mhm.
and that's to the tune of $1,800. And
Whoa.
this is now 2 months. And they say, well, we say 60 days, so it's gonna be 60 days or more. I say, this is a credit card, it should be insured. The Spanish man keep talking. I said, if you call me one more time, I can tell you something. My card had a credit of $400 on it. So they got plenty of money to find.
Mm-hmm.
Yeah.
Yeah.
So they're
Yeah.
not user friendly, most companies.
And especially now because we have all these persons from you call a Royal buying people from Trinidad or Jamaica answering and it's
Yep.
like I know somebody because I was trying to get a letter from to take the national insurance because national insurance didn't have like 11, 12 years of my contribution. 12 years. I say, excuse me, miss. We don't have your contribution. I'm looking at this thing they give me, and I say, you're missing 12 years of my contribution. What is all about? Y'all will be paying me no $2. Y'all better go find my contribution. They tell me I had to go to Royal Bank where I used to work, and I had to get a letter. I did. I talked to the lady. She said, okay, but she won't let you speak to nobody. And so I had to talk to her and tell her what I was looking for. And I never saw where they got back to me. I had to reach out to them. I just keep digging and then I go on and I find out somebody gave me an email who used to work there and they say, try this and see if somebody will reach back out to you. And I did that. And that's when somebody from Royal Bank reached out to me. And so I had to go to them as a former employee and they had to go back and they say, ain't nobody working in the office. So they did what they had to do when they could do it. So I had to reach out to them because them people answering the phone in Trinidad, he never reach out to the persons. The woman told me she would have sent an email to them, but nothing ever happened. Nothing happened until I reach out. Somebody gave me an email and I reach out to them. And that's when it happened. Yeah, but I
Yeah,
finally
no,
got
well, I
sorted
know
out.
Roberto ain't gonna never call me again. Because I asked him where he lived, and I said, okay, I gotta take a flight because I wasn't in Dubai, and I know I was nowhere near Dubai.
Yeah, but I thought with Scotiabank, I thought that's like, all them that's Visa or Master what they have.
They have, that's Master.
But
Must
I
be
thought they
Master.
all a bit the same.
It's
Yeah.
all, they all under the same umbrella. But I
Okay.
reported them to MasterCard, the company itself.
Okay. All right.
So
Yeah.
now they're gonna have to answer to them about why they're handling, because I am still a MasterCard customer.
Okay. Yeah. And like I say, because with the different jurisdictions, we find that that's what's happening. Can Miss Cartwright, can you page 85, H03, additional coverage, landlord furnishing.
Sorry, Miss Smith, I don't have my book tonight. I haven't gotten home
Okay.
as yet.
Oh, okay. Miss Knowles, you want to look at that again for me, please? That's
Sorry?
page 85. The talk with additional coverage talking about the landlord.
Okay. Landlord's furnishings. If the insured rents out part of the residence premises as an apartment, the insured appliances, carpeting, and other furnishings in the apartment are covered for the covered C perils except theft. Okay. Loss assessment provides insured $1,000 of coverage if he or she is assessed for damage to property that is owned by an association of property owners, of which the insured is a member. The damaged property must be collectively owned by all members of the owners association. The peril causing the loss must be covered under coverage A. Oh, okay. Okay. Tell me further. Perils coverage and homeowners insurance, HO3. Gives open perils coverage on the dwelling and other structures. Broad named perils coverage on unscheduled personal property. You want me to continue?
Please.
Open perils dwelling exclusions. Buildings under construction. No theft coverage exists for materials and supplies.
Oh.
Coverage begins when the dwelling is completed and occupied.
Whoa. So they don't have contractors or risk insurance.
Oh, wow. Vacancy beyond 60 days. When a building is vacant for more than 60 days, coverage for vandalism, malicious mischief, breakage of glass, and safety glazing materials is suspended. For the purpose of this coverage, a dwelling under construction is not considered a vacant. Okay. Molds, fungus, or wet rot, generally excluded. However, an exception provides coverage for mold, fungus, or wet rot that is hidden within the walls, floors, or ceiling of a structure. If the loss results from water or steam from a plumbing, heating, or air conditioning system, or a household appliance. So let's go back to vacancy beyond 60 days. So that would explain why
Right.
when the bank takes over,
Right.
there cannot be no insurance because there's
Nobody
occupancy in that building. Gotcha.
Yeah. So that's the reason why
I understand why Commonwealth Bank is allowed the people to stay in the house.
Yeah, because if they don't, that means they can't get insurance.
The house is uninsurable.
Gotcha. Right. So now we see why some banks allow customers to stay in it. Then we have all property exclusions. Several general exclusions apply to all property, including earth movement, flood, and several other types of water damage, war, intentional loss, neglect by the insured, or to protect the insured property from loss, and the time of loss. Let me tell you, I cannot see. This is too small. Anybody else have, Miss Cartwright says she didn't have a book. Miss Nan, Miss Burrows, were you able to get your book?
Yes, I have it, but the page, you said page 85. I have something different on my page.
86. 86?
I thought you said 85.
We were on 85, now we're on 86.
Okay, so
but the writing is so small.
You have definitions? Is it definitions on page 86?
No, it's all property exclusion.
No, I don't know. Page 86, I'm in chapter 7, and this is basically talking about auto insurance.
So you don't have those other, what about y'all? Y'all have those other pages? Anybody, Miss? Miss Knowles. Miss.
Yes, ma'am, I have them.
I have, what is this? The homeowners insurance, the property insurance, underwriting, eligibility, all of that stuff to page 81. Then I go on to chapter 7, which is auto insurance, and that's 83.
So then Miguel missed some pages out of your book. Yeah, so he missed some pages out of your book. Let me see which pages you don't have. So we missed some pages from your book. Yeah, and so I mean your pages are, your print is very is large because I can't hardly see. I have to tell Miguel. I don't
Yeah, but
understand
I
this.
see this print is this on page 69. The homeowners insurance coverages.
Uh-huh.
Yeah, this
Well,
print
your
is really
pages may
small.
be different from mine. When Miguel print the book, because my book is from 2020. They didn't give me a new book.
This is anyway, so which one you stop at, no?
I think I stopped at all property exclusion. Right
Hold on,
there.
let me see.
Let me tell you what I want y'all to go on. Don't worry about the protection. I want y'all to go on the guarantee replacement costs, the personal property replacement costs. She's saying on 76. So I want y'all to look at the guarantee replacement costs, personal property replacement costs, and flood insurance. So if you start from guarantee replacement costs.
Guarantee replacement cost is page 77 for me.
Right. The other two where it has name peril protection, no. Leave that out.
Give me
So
a
you
pen.
can mark an X to that. So we're not gonna do that. Ms. Burrows?
Baby. You want me to read guaranteed replacement cost?
Yes.
Oh. The guaranteed replacement cost applies to the dwelling and provides the policyholder with full replacement costs at the time of the loss. The policyholder is required to insure 100% to value when the policy is purchased and increase the state value as requested by the insurer. Most versions of this endorsement limit the policy to 125 to 150% of the stated value, may or may not increase the limits for coverages B, C, and D. An attractive endorsement and a good way to eliminate the potential co-insurance problem that can occur when a hurricane or tornado strikes a city and building costs explode during the rebuilding period. Okay, so personal property replacement as well, right?
Please.
And flood, okay. The personal property replacement cost before 1980 An individual could not purchase replacement cost coverage on an unscheduled basis on personal property in the homeowners program. In 1980, a new endorsement was introduced. The insured could collect the smallest of 4 amounts for personal property: replacement costs at the time of loss, full repair costs of the time of loss, any special limits of liability pertaining to coverage C, the limit of liability for unscheduled personal property and coverage C, which is usually 50% of the dwelling coverage. Personal property replacement again. Certain types of property are excluded from the replacement cost recovering including fine arts, paintings and antiques, memorabilia and collector's items, property that is not kept in working condition, obsolete property. Usually no payment is made until the item is actually repaired or replaced, unless the loss is less than $500. Flood insurance. Flood insurance for residential properties is generally administered by the Federal Emergency Management Association, FEMA. Underwrites losses and works through private vendors and insurance agents to market and service the policies. And I guess that's what we're doing from FEMA to NEMA. To be eligible, a community must apply and conduct extensive flood plan studies, make flood plan maps, develop a flood plan management program. FEMA program is attractive to insureds because the federal government subsides the rates.
Okay.
Wow.
So we'll in this chapter we'll stop there. So we know we're gonna go up to flood insurance. We won't talk about underwriting eligibility, shopping tips for homeowners, and persons insured. We're not gonna talk about that.
Mm-hmm.
So that's not gonna be a part of the exam. So y'all can put an asterisk to those so you know that will not be a part of the exam. That's something y'all. You think I need to give y'all a review sheet again?
Yes, please.
Yes, ma'am. That helped me out a lot. No joke.
So what would have happened if I didn't?
Huh?
We would have flunked. We would have flunked that exam. Like I probably did for my class. That didn't get
What
no
happened?
Nothing. No, we don't speak that.
We came to class when you didn't even show up.
You mean when I was sick?
Yeah.
When I was sick, because my granddaughter was sick, going to school and come make me sick. So that's why I was sick. She was sick, I was sick. Yeah, everybody in the house was sick. I didn't have COVID though. I take so much pills, I don't even know. I say COVID there, he gone. Because what? No way, I ain't had COVID. But like I say, hopefully y'all will all have done well. So, because y'all could see, as y'all see, these chapters have a lot of information, right?
Yes, ma'am.
So you could imagine having finals from chapter 1 to chapter what? Nada. So
chapter 1 to what? To 4.
No, chapter 1 to chapter 12, 11 in the book. That'll be final exam. Huh?
I can't count that high.
Now we have automobile. Like we talked about this before, car insurance. We still have third party. We still have RORAC, Miss Knowles. Y'all know about RORAC? RORAC.
They don't have that no more.
I couldn't imagine I could have a RORAC insurance, just have my car on the road. But a RORAC insurance, that means I could just have my car on the road, but if I hit somebody, what happened? Or so, what happened if I hit somebody? Will they pay? Do you know, Miss
Nope.
Knowles?
No,
That
no,
was
no,
that. What happened?
they don't pay.
So with road act, if I had hit somebody, I gotta fix my car, and they gotta fix their car.
You gotta fix their car.
Oh, I have to fix their car out of my pocket.
You have to get a second job.
Oh, okay. Well, like I said, we have third party now. So third party means with car insurance, car owners insurance, third party means that, okay, I hit somebody's car. My insurance company will pay for the person's car, but I got to pay for my car out of my pocket, right?
Yep.
Comprehensive insurance means that if I hit somebody's car, the insurance company can pay for my car and their car, right?
Yes. And they get, and
And
in some cases, they give them a rental for so many days. I think it's 5 to 7 days. I'm not sure.
but they can give me a rental?
It depends on how yours is written. I have what you call a platinum one. It covers me for 14 days with a car. It fixes my car and the other person's car. And anybody who drives my vehicle is covered under that.
Also,
do they give the?
You have to bear in mind, back in the day, we used to think comprehensive means full coverage. But
It
now
doesn't.
you have comprehensive that have so many different categories that, like for me, I have a vehicle that's comprehensive, but it's only for total damage. So if I hit one of my bus, then I'll have to pay for it. Only if it's total damage, or if I hit someone, they'll pay for the other person's car, then I'll get paid. Other than that, for that particular insurance. And I found that out, well, I realized that after the fact.
Yeah, I remember you saying something about that.
Yeah.
And so, like Miss Burrows said, some things, and that's why I say, we don't read our insurance, so we don't know. And then customer service reps or insurance agents don't tell us the full story because they just want get that insurance, get that sale. So they don't say, oh, you know, Miss Smith, if you take this out, you know, if you get in an accident, this is all we're gonna pay, and you gotta do this and you gotta do that. They don't tell us that. So what happens when you get in the accident? Now you go in, oh yeah, my insurance company can pay. When you get there, they tell you, no, look at your insurance contract. You don't have that. That's not a benefit for you. And so that's why I say, just like in the banks, a lot of times people come to the bank and they ask, you know, people don't really give them all the information that they need. And then some people do, and then person just say, well, this is my business, not yours, and this is what I want to do. But like I said, I don't think a lot of times agents, customer service rep educate persons, you know, to help us to make better choices and better decisions when it comes to choosing a plan or choosing an account, or, you know, just helping us to understand things more. I think a lot of times agents don't do that when it comes to insurance because they just want to make a sale. Yeah. So insurance claim. Insurance has been faced with, well, we know every day you look around here in the Bahamas, especially Nassau, it's always an accident. Every time I look, somebody's sending me something, it's always an accident. And as we know, we have a lot of little Japanese cars. I have one of them. We have Japanese cars, and the people just be flying on the road. I just be like, hold on, you only see this little car you in a, why are you overtaking people so much and just speeding? So I so frightened to even drive on JFK. I am so grateful that they opened Gladstone Road, that corner which used to come off Gladstone Road on to JFK. I just go through that. I mean, I got plenty bumps, but I go through that because I'm so scared to even drive on JFK because the people just be flying and they don't care, and they be like grazing you, trying to get in front of you, you know, switching between lanes. So, and that's why we have so much accidents, and that's why our car insurance will go up also, because it's just so much accidents. And then when you go to the insurance company to like you say, I have a third party, so they're fixing my car. If I'm in the wrong, I have to fix the person's car. So what happens if the person in the wrong and they ain't have no insurance, Miss Knowles? What happens? And I have third party.
They don't have insurance, but they in the wrong.
Yeah.
They
And I
gotta
only
fix
have
your
third
car.
party.
They have to fix your car. Your insurance company steps in, and your insurance company have to sue them.
The insurance company would have to fix my car?
No, he has to fix your car. You can
Suppose
ask
he
your
have no
insurance.
money.
Oh,
Suppose he
sir.
driving a car, no license, no insurance, and he hit my car, and I have to sue him to get my car fixed?
Yes, ma'am.
So would I pay that third party for just to fix the next person car and my car get hit? So they ain't gonna pay to fix my car, then they'll pay if I was in the wrong and hit somebody's car.
Yes, ma'am. It's only to have you on the road legally.
So that's what I then.
Pretty much, a step up.
Whoa. I couldn't tell you the last day I had comprehensive insurance. Even when I drove a car, I had a 2000 and Mercedes 12, and it was 14. When I had a Honda Accord, I bought that in cash, and I never did know, and that was value almost 19,000. I never did no comprehensive insurance, not me, because I didn't know nobody, so I didn't put it in comprehensive insurance. I just had all the lock on the tires, the lock on the wheel, make sure nobody could have thief it. So I never put that in comprehensive insurance. I think I did it when I had to sell. When I sell it, then I went and I put it in comprehensive insurance and I sold it. And I don't know if the guy kept it in there, but I sold it. I put no car in comprehensive insurance. None, not me. But like I say, when it's time to claim is always an issue. And then sometimes when you go to claim, you'd have comprehensive insurance and you go to claim, it says, okay, when these persons come, adjusters do the same thing for car insurance, Ms. Knowles? To
Yes,
save a car's a write-off?
Okay, a friend of mine is an adjuster.
Mhm.
There was an accident and the car was at the, what the place name is, to get to the stamping to get fixed. They were taking too long to bring in the parts. It was coming on to like a month. So they wrote off the car and gave the person the
because the
funds.
part was taking long to come in?
Because they still would have had to entertain the person with the rental car. So they were losing, it would be cheaper for them to write off the car than to have it repaired. Now they will they will keep the car, repair it and sell it. That's what they do.
So the insurance company would do that?
Yes, ma'am.
Oh, okay. I didn't know that. Oh,
Yes, ma'am.
Okay.
Get it?
So they'll sell the car.
Yeah.
Okay. They say the need for insurance. Well, we know we need insurance. Like you say, we have an upgrade from road act to third parties to keep us on the road. So, but we need insurance for, if things happen, getting in an accident. Like I say, I wish I could do comprehensive, but it's just like may have to pay all the money. So I have third party and I used to be robbing everybody on the road. Don't you miss and come close to my car because I walk. But it's good to have comprehensive insurance, yes. And like Miss Burrows say, make sure read all the fine prints for comprehensive, not to learn that comprehensive was only if the car get fully write off, not just little damage on it. Little damage, you have to pay to get it fixed. So yeah, I never even knew that until she talked about it. Yeah, I thought if comprehensive mean comprehensive, so if my car get hit, you all need to fix it. I didn't know that there were specifications to say that if it get damaged, you gotta fix it. If it get totally written off, then we'll we'll pay you for it. Yeah, so I didn't know that. So like I said, we need insurance to ride on the road. We need insurance. And today, a lot of persons don't have car insurance. A lot of cars not even insured nor licensed. So people are driving on the road uninsured and not licensed.
Why is my child telling me that you ran from us?
So what should the average driver do to protect against the financial consequences of high cost of automobile accidents and substantial probability of being involved in one? Risk managers of large corporations that own many automobiles often retain the risk of physical damage to the vehicle. However, for nearly all individuals, that the answer has been insurance. Despite its high cost, in many states, auto liability insurance is a legal requirement. Self-insurance is not usually an option, as few individuals own more than 2 or 3 automobiles. So, Miss Burrows, so all of your vehicles, business vehicles, are in that kind of comprehensive insurance? Miss Burrows?
What? Come on, money.
Yeah, I was asking you if all of your business vehicles in that same type of comprehensive insurance.
No, not all. Not all.
Okay.
Yeah.
Okay.
Some is full coverage.
Okay. And then we have personal automobile policy, PAP, which was introduced in 1977 as a part of the consumer movement designed to produce easier to read insurance policy, replace the more difficult to read family automobile policy. Eligibility. A car must be owned or leased by an individual or jointly owned by a husband and wife. PAP is primary designed for private passenger car use for pleasure or business, but a pickup truck or van used in farming may not be insured as may a pickup truck or van that is used to deliver transport goods. And like we know, with insurance, Miss Knowles, correct me if I'm wrong, with insurance, car insurance, okay, say I have a car insurance, anybody 25 and older can drive my car. And if they get in an accident, my insurance, my comprehensive insurance will still pay to have the person car repaired, Miss Knowles?
Again, remember what Ms. Burrows said, you have to read the fine line. So some says that, and then some comprehensive have named drivers. Named drivers, if you have named drivers, the insurance is a bit lower, but if you have an open plan, that's when anyone over 25 is covered. And they have to have their license for a minimum 2 years.
Okay, another thing. Okay, say somebody drives my car and they also have it. I know it's something to do that they have insurance, also have their own insurance. It's okay for them to drive my car. I was trying to figure out.
Correct.
So if they get in an accident because they have their own insurance, they can still drive my car. And if something happened to my car, what happens then? Does their insurance pay for any damage to my car?
Yes. Okay. So if I drive anyone's car, I have what you call a platinum coverage. That covers me driving anybody's car. So if I get an accident in your car is repaired and the other person's car is repaired. But again, you still have to read the fine line, and only so many persons get the platinum and gold coverage.
Okay. All right. Okay. Because and like I said to y'all before, I remember someone who was in my class, he was an insurance agent, and he said to me, he said to the class that a lot of times we don't read the fine print, so we don't know that if you get knocked down and you have a dependent child and you're not able to work or something happened to you, the person who have that comprehensive insurance and they knock you down and your child still needs support, that person, if you die or something happened, that person has to actually take care of your child until they're 21 or something. Do you know anything about that, Miss Knowles?
I'm not sure.
Yeah, because he told us, he said, because we don't read, that is there. He said, and I always was supposed to actually ask somebody who, these insurance persons, he said, yeah, he said that is there, but because we don't read, it's right there. People who have comprehensive insurance, if they knock someone down and that person can't work, that insurance company has to take care of them. That insurance company have to take care of them, and if they die, that insurance company have to insure if they have young children dependent, that insurance company has to actually take care of those children. I said, that happened here in the Bahamas, that here? He said, yes. But because we don't read and we don't know, people get away with stuff like that. Because you know how many people get knocked down and they still have little children. And look at the guy walking on, was it Gladstone Road? Where was it? JFK. And he got knocked down and the person hit and run and left. But then at the end of the day, she turned herself in, So, but he said yes. If somebody you get knocked down, and especially if you're walking on a pedestrian crossing and you get knocked down and you die or you can't work and you have dependent, that person who have comprehensive insurance, that insurance company has to take care of your child until they're 21, and they have to take care of you as because you can't work anymore. So the insurance company has to take care of you. Then we have definitions. You and your are used to refer to the name insured and the spouse. If a resident of the same household, we, us, and our refers to insurance company. No fault means that the insured does not have to prove another person negligent before compensation can be received from an insurer. So you don't have to prove that that person was negligent to get paid. Is that here too, Miss Knowles? Well, Miss Knowles, I saw it, but I have to ask you because you was in the insurance field, so I'm just
What
asking.
did you say?
It says no fault means that the insured does not have to prove another person negligent before compensation can be received from an insurer.
Correct.
Pardon me?
Yes, ma'am.
So we have that here also.
I know about that, but I know it's standard in the US, but I'm not sure if it's standard here. I can find out from someone and.
Yeah, so when we have class again, you could say, let us know what it is.
Yeah, I'll put it in the group.
The term covered auto includes these categories: any vehicle shown on the declaration page of the policy, any of the following types of vehicle that you acquire ownership or during the policy period: a private passenger auto, a pickup truck or van meeting certain requirements, any trailers you own, any auto or trailers you do not own, while use of a temporary substitute for any other vehicles described in the definition. That is our normal use because of the breakdown, repair, service loss, or destruction. Definition. With respect to replacement vehicle, one must only notify the insurer in order to obtain coverage for physical damage to an auto. Liability protection is automatically provided for the policy term. The insurer must be notified to obtain physical damage coverage because there is a high probability that a greater exposure exists. A trailer is defined as a vehicle designed to be pulled by a private passenger type auto, pickup, or a panel truck or a van. It also includes a farm van or a farm implemented towed by one of these vehicles. So this is just talking about the different type of vehicles that is covered. A family member is defined as a PAP, a person related to you by blood, marriage, or adoption, who is a resident of your household. Occupying is defined as in upon getting in, on, out, or off. In the PAP, bodily injury means bodily harm, sickness, or disease, including any death that results. Business means trade, profession, or occupation. Property damage is defined as physical injury to destruction of or loss of the use of tangible property. So they're just straightforward talking about the different definitions. Anyway, we're almost finished with chapter 7. So can you all complete chapter 7? So when y'all come on Monday, we will go into bank regulations. That's when we really start talking about the different risks. But I'm also wanting y'all to look at that handout that I gave y'all for chapter 2. Look at it because I'm gonna have some practical questions for us to look at. So look at that handout, talking about the mean, the median, the mode, talking about deviation, so variations, and so we can actually do some examples, and because you will see one or two of those questions in the exam. And I will give you the questions where you have to choose the mean, the median, the mode, or you have to work the standard deviation. So look over that handout that I give you, come with your questions so we can do some practical. And once you understand, we're able to go forward. But I need you to actually complete chapter 7, which is just talking, it's kind of straightforward. Yeah, complete chapter 7, and then we will go on to chapter 8, which totally talks about bank regulation. So this is where you see the central bank coming into play. You see guidelines, you see regulatory act like Reporting Act, you see the Financial Intelligence Act, FIU, and stuff like that. So we'll talk about the central bank. We'll talk about the regulatory board. And then chapter 9 totally deals with risks, the different types of risks, credit risk. And like I say, with chapter 8, you'll talk about Basel. Any of you know about Basel? So we'll talk about the Basel, and what I'll do, I'll send you all, I'll try to see if I can locate that video, because it breaks it down more and explains to you how what Basel is all about, the different pillars, the different options, and it talks about the monetary policies and all of those stuff you'll learn in this chapter 8. Okay, so that's when we really going to get into we talk about the legal and the regulatory framework in the Bahamas, the future of regulations, the first step towards regulatory cooperations, problems facing greater regulatory cooperations. So things like that, the roadmap to the future. So things like that we'll talk about. It's really going to be totally talking about the central bank, talking about the different regulatory bodies like the Securities Commission and all, on the FIU, talking about the different acts that came into play because of the financial crisis and because of money laundering. These different acts was implemented in 2000. So, before 2000, people was putting all kind of money in the bank. But after these acts were implemented, you know, banks had to start ensuring that they follow the policies and procedures. And then we'll talk about capital adequacy, the liquidity that banks have to ensure that they maintain on a daily basis, because every day liquidity report is done to the central bank. So here again, like I say, these are the things we'll talk about. Financial Service Authority in the UK. And so now we'll come into play with talking about some of the risks. Okay? But I need y'all to finish reading chapter 7 so we can just move ahead to chapter 8. And I will send y'all results to y'all by the weekend. Okay? So y'all will have y'all see, because y'all exam was done at BIFS, I had to go to BIFS because she scanned them to me, but I can't mark them from like how I mark your quiz from the system, because it's in PDF. I can't do anything to it. I try to convert it, but it jumbled it up. So I had to go and collect the papers from this. And then, and I didn't collect them till Friday. So I collected them from this. So now I have to mark them. So I'll have your assignment grade and your midterm grade. I'll send it to you by Friday. Okay?
Okay, thank you.
All right. Good night.
Good night.
Thank you. Good night.
Good night.
Good night.
Night.
Good night. Okay.